This trade was taken on LIC Housing Finance, and the trade idea was basically generated based on a weekly bias of the stock. So, as we can see in previous few weeks, the stock has formed this three candle standard swing low as per ICT, and also this swing low is coming from a discount area, which is a bullish order block, as you can see here. So, also another confluence is the third candle of this swing low actually breaks the high of the second candle. So that is a quite a bit strong confluence and strong indication that in the next few weeks we will be bullish. So, but bullish up to what? Up to the next round liquidity. So we had an internal range liquidity here, which is this bearish fair value gap. But actually we are here. Actually we are here in the previous week. So we can already see that this internal liquidity has been violated already, and hence the next drawn liquidity is this swing high. This swing high. So our best guess is we have created this bullish fair value gap. So price may start Monday from somewhere here and then sting into this bullish fair value gap and then run towards this drawn liquidity towards the end of this week. So based on that, we move to our 5 minute chart in Monday's trading. So let us see that. So this was Monday. As we can see here, this gray color box, this is the same weekly bullish fair value gap. This one. So price stings into it and then runs through. And based on the understanding, we can see that it is trying to hit the previous day high. So I was here. I was here when I was thinking about taking a trade. And so, what do we find here? We find this order block, and this is a valid order block because we have a bullish fair value gap here, and hence one trade idea is taking the last candle of this order block, starting from here and keeping the stop loss is below it, like here, and target up to previous day high. Why? Because it is very close to previous day high, so it is more probable that before going down or retracement, it will first hit here and then it may go down. Because we can see here we have uh, created these inefficiencies here, this one, then this one. These are all unmitigated now. So price can anytime come here for retracement and then go up. But since it is very close to previous day high, I thought that it will be more probable that it will first take the previous day high. That was my understanding. But as you can see, price came down and down and down, and when it was like very close to my stop loss, I thought that how about this? We can say that this low is a protected low, because this is an intermediate term low coming from a higher time frame fair value gap. So it is very unlikely that price will break this low. So instead of taking this loss, what will happen if I just buy more of this stock from this fair value gap? So I put another order here, as you can see. As you can see here, this is another set of orders, and this was the first set of orders. So this was already running through losses, and stop loss was not. I deleted the stop loss and bought it again here. Why? Because we had a fair value gap this fair value gap. Based on this fair value gap, I bought it here. And then in the next day, I was hoping that price will bounce from here. Already so started bouncing, and will bounce here from here and reach towards this previous day high, which is the closest drawn liquidity. Okay, so as you can see, the next day, actually this what we expected actually did happen, and prices bounced from here, and it is not keeping any fair value gap here, so it has no intention to come down, and it was pretty much a one-sided movement, and we exited here. So as you can see here, two sets of buying and selling, because there are certain confusion about which one to sell, delivery and intraday and all these things with the broker, and so I sold it in two separate lots, but in very close range of price. So this was the second trade. So we entered somewhere from here. Stop loss was below this low, and target was basically this, but I took it from like little bit more, because in order to take 2:1. This one also, and this one also. So as we can see, so this first trade gave us 4.25:1, and this is 2:1. So in total, it was 6:1, 6.5:1, something like that. So that was my trade idea. I know it was a unconventional way of trading. Moving the stop loss is not a standard manner of doing trading, but please use the comment section to let me know what do you think about it. So should we have taken the loss here and moved out, or this is okay, like buying more at averaging and then waiting for the next day? Of course, it can also happen that it will go down and take this stop loss here, because there were multiple news that are coming in the international scenario, like Israel and Iran war and so many things, so many other things. But we are just looking at the price, and we are not concerned about all these things. So based on that, I took that decision. So it turned out well, but I don't know whether this decision is correct or incorrect. So please use the comment section to let me know your opinion on this. Thank you.